Welcome to another stage analysis video. It's Sunday the 19th of November 2023. Lots to get through as always on the weekend video, starting with the major indexes. We're going to look at the futures charts, industry groups, relative strength rankings, the bell curve, market breadth data to get the weight of evidence, and then we're going to go through some of the recent watch list stocks in a bit more detail at the end of the video. So as I said, starting off with the major indexes, starting with the S&P 500 here as usual, which over the last 3 weeks has had a really strong move. We haven't seen this kind of move since back in the stage 4 decline there. So we go see obviously the quick rate of change through here. We haven't seen a similar move since this probably the July period in 2022 when it rebounded from the stage 4 lows through there. A little bit stronger back in the October period last year as well. But at the moment, currently with the move back above the 30-week moving average after a failed stage 4 breakdown attempt here, it's now back in what we call the stage 3 range. So obviously it's been a distributional pattern over the last 3 or 4 months here. Obviously we're getting a strong rebound back towards the highs, and which has been borne out across the major indexes, and we saw obviously that expand this week with the small caps starting to, and the NYSE starting to play catch up a little bit as well. But we do remain in this stage 3 range, so whether we make a stage 2 continuation or whether we up thrust and obviously come back into the range and start to roll back towards stage 4 again is obviously anyone's guess here at this point. Obviously the ideal, maybe a consolidation, VCP type move, and obviously continuation off towards the highs in stage 2. As I said, we could see up thrust type behaviour. We could start to come back into the range, and this could all roll over, and we could start to see a stage 4 breakdown again. So obviously anybody's guess at the moment, but in the short term, we've had 3 weeks on what we call a positive environment. The combined percentage of stocks above their 50-day, 150-day and 200-day moving averages is something I do for the members on here. Give us a good idea of the overall market health and position. So currently we're at 47%, anywhere between 40 and 60% is a more neutral range. So what we call the stage 1 or the stage 3 environment. This covers the entire NYSE and the Nasdaq composite, so over 5,000 stocks compared to obviously the S&P 500 here above, which is only the 500. So we're currently around 15% above the key moving averages here, which we used as a signal line. It moved to a positive environment status on the 2nd of November. So we've had good 3 or so weeks now on a positive here. But it's, as I said, still within the stage 3 range and getting extended a little bit in the short term. If we look at the daily chart, you can see the lockout rally we've had, as it's obviously any kind of pullbacks have been intraday, they've been absorbed and continued higher. There's only that single day where it started to pull back into the 50-day and then quickly to reverse the next day. But all other pullbacks have been held to intraday pullbacks, and it's continued up. And then we got that big gap up move this week on Tuesday. So from Monday to Tuesday, we saw an expansion in the overall moving average breadth of more than 10%. So we saw the overall score jump from the mid-30s into the mid-40s in some cases. So now running up at the +3 ATR level here. So as I said, a little bit short-term extended. You can see during uptrends we get up to the 3 ATR level, but obviously at some point that needs to consolidate, let the moving averages catch up or so, but doesn't necessarily mean it has to be yet. It's not extended above the ATR level yet, so just running along it at the moment. So just highlighting that we're in a strong uptrend. And as anyone that's watched the videos before would say, that anything above this +1 ATR level here, which is the 1 ATR above the 21-day moving average, is when we're in a short-term uptrend. So you can see since back on this move here, this day, which was the 3rd of November, it's obviously we've been considered in a short-term uptrend here, and I'll show you that a little bit later in the market breadth data as well. See percentage of stocks above their 20-day EMA in the S&P 500. It's up at 83.8% at the moment, so very strong. Obviously extended level, but when we're in a short-term uptrend, we tend to hold above that 70% level and chop around that. We do get some pullbacks back into the mid-range, but when you're in an uptrend, you tend to hold in the upper half of the chart. So currently in a strong position, but certainly short-term extended a little here. Nasdaq very similar to the S&P 500 here. You've got percentage of stocks above their 200-day moving average in the Nasdaq 100 at 67% at the moment. So in what we call a bullish position here, anything above 60%, you're in a bullish mode. 40 to 60% again is your neutral range, and 40% and below is your weak area. So stage 4, stage 1 and 3, and then stage 2 area. So stage 2 area from a technical point of view on the market breadth data there, but we are in stage 3 on the Nasdaq 100 here, as you can see, but testing the top of the upper range here. So the July high tested that this week, obviously broken above multiple near-term pivots in here. We did have this downtrend channel over the last 3 months, which this has obviously now broken above again, but we're still within this obviously horizontal range here, hasn't yet broken above. So similarly to the S&P 500, obviously looking for continuation breakout stage to obviously move off to new highs and test those obviously 2021 highs, but just as easily we could roll over, we could form an up thrust after distribution and start to turn back towards stage 4. So a few scenarios for you there of where we are. We need to be aware that we are in stage 3 still. So although lots of stocks have had very strong moves in a very short amount of time, there's obviously heightened risk at this point in the market until we start to see more areas of the market make continuation breakouts. So very, very key at the moment what's going on. We have got a shortened trading week coming up as well. Typically, believe we're normally bullish into a Thanksgiving week as we run up into it. But obviously after that we'll see. But at the moment, remaining in stage 3 here, but in a strong position from the market breadth perspective and the chart, but again a little bit short-term extended, as we can see from the daily chart here. But we did consolidate for 4 days at the end of the week there, again highlighting the lockout rally we've had. All the intraday pullbacks have been absorbed and carried on higher, so sitting at the +3 ATR level just below there at the moment. So looking for a continuation attempt here, but again, if this obviously fails at this point and rolls over, it starts getting back below these moving averages, it could quickly turn from stage 3 into stage 4. So you need to be aware of that risk is elevated. 81% of stocks above their 20-day moving average in the S&P 5 and the Nasdaq 100 currently. So same with the composite, a little bit weaker than we see with the Nasdaq 100, not quite at the highs yet, testing the secondary high here, the peak from back in late August. So a little bit weaker in terms of that, but still in the stage 3, but has had obviously a strong rebound back within the range after the failed breakdown attempt. So percentage of stocks at 31.22% above their 200-day moving average. So we're still in the lower position there, still the neutral zone in the 40 to 60 range there. We need to see some obviously strength to come out of there in order to catch up with where we saw back in the January period and through the June-July period there. Still massively underperforming compared to that. There's lots of stocks have obviously been in stage 4 recently. If we look at the daily, again, very similar to what we saw on the Nasdaq 100 there. We get the downtrend, obviously channel through here, roughly draw that in. So it's obviously broken out above that. We're above at the 3 ATR level again, so a little bit short-term extended after the gap up on Tuesday, but consolidating, so in a good position to make a continuation attempt, and 63.97% above their 20-day moving average. So covers obviously a few 2,000 or 3,000 stocks in the Nasdaq composite there, so obviously that's a strong position with almost 2/3 of stocks above their short-term moving averages there. Look at the NYSE, we've seen a strong recovery after a failed stage 4 breakdown attempt. This one has been going sideways for the entire year. You can see all the way back from November last year, we've been in this broad range through here. So we draw this across, been in this much broader range where obviously you had dips above and below at each end of the scales there. Stage 2 continuation attempts, breakdowns to stage 4 multiple times, but it's held and rebounded each time. So at the moment we're still very much in a very neutral position. 50.62% plays that out above their 200-day moving average, so incredibly neutral in terms of the percentage of stocks above their 200-day moving average as well. So either in a stage 1 or a stage 3 position, depending on how you look at it. Obviously after the failed stage 4 breakdown and back into the range here, tend to give it the benefit of the doubt as back into what the broader range was before, which was potentially 1, but we did have a failed 2. So it's either way, it's neutral. So you don't really, when you're doing stage analysis, you don't necessarily, when you're doing stage 1 or stage 3, need to get into specifics. All you need to know is that it's in a neutral position, and obviously we then look for signs of distribution or accumulation, etc. So look at this on a daily. You can see there has been a short-term change of behavior back above the 200-day moving average, breaking above multiple near-term pivot highs through here. So we have got 4 days now above that, holding strong. We're at just above the 280R level here in the short term. So this is a positive change of behavior. Obviously broken through the downtrend channel above the 180R level. So short-term uptrend within a broader sideways range, and 71.51% of stocks above their 20-day moving average. So again, 3/4 of stocks in the NYSE are now above their short-term moving average. Look at the Russell 2000. We also saw a big recovery move this week, but it did squat at the latter part of the week there. If you look at it on the daily, you can see the pullback as it came in. Obviously had a stronger day on Friday. You can see on these weekly bars, we've had a good move over the last few weeks, but we're still below that 30-week moving average. We're still in this massive sideways range that it's been in for the last year and a half. Obviously the range year to date has been tighter, obviously dipped below that, so we had this shakeout move and a test potentially started to come back through again. See the breadth has expanded. We're now back at 46% of stocks above their 200-day. This covers the S&P 600, not the Russell 2000, so not quite the same data, but gives you a rough idea of that. If we look at the daily chart, we've got the percentage of stocks above their 200-day, and the S&P 600 is at 79%. So again, more than 3/4 above their short-term moving averages, but we're still below that 200-day moving average. So we need to break above this 182 level here in order to potentially get back into a more positive position. Look at the VIX, continues to be below its 200-day moving average. Anything below the 200-day moving average is more positive. Obviously, the further we get away from that, below these pivot lows from here, it's obviously more positive. So at the moment, drifting lower, so in a positive position, but if it starts to pull back into this area, back towards its 200-day, obviously that would be a warning sign. Right.